Okay, Hugh Hendry, I am the acid capitalist. This is Message to Self. Slow delivery. It may be, what is the time? Oh, it's 10:30 in the evening. It's been a long day. Another one. Which day is it? It's Tuesday, the 21st of October. Boom, boom, boom. The music begins. No fanfare. I have been on Twitter all day. X is driving me crazy. And you know what? And I promise you, I tried to tell you about this yesterday. And actually, I do fear that I passed a false impression of what I do. I said to you that I like a cup of tea in bed in the morning. Liar, liar, pants on fire. I drink coffee, baby, with MCT oil, and I certainly don't drink it in bed. I wake up. I'm not getting to... 10:30. This will probably run 45 to 60 minutes. It's 11:30. Then I've got to add the music. I know I'm boring you, and I've got to dump it into iMovies, do a little bit of edit. Then I've got to upload it into Substack and Patreon, and I've got to put it onto the podcast. I've got to think of a title, a little description. Oh my God! So it'll be 1 o'clock before I'm out, and I need 8 hours. I'll wake up at 7. So that's only 6. But I will put my Beats, my iPhone head things, ear things in my ears. I will put on my eye mask, and I might listen to this show, God forbid, or I will certainly do meditation. And I remind you, ladies and gentlemen, this is Acid Breath. And again, did you notice my cadence? It became rapid fire speaking. That's not good. So yeah, I don't take tea in bed. I typically will fall asleep again until 9. And I really enjoy that. So my rule with the meditation, may I share it with you, is counting my breath, but just 4 breaths. And then you start again. And it's 4 because even such a low number it's remarkable how you start counting 5, 6. You're like, no, 4, dude, 4. Go back to the beginning again. And I swear that just boom, it just allows me to dive back into the pool of sleep. I have been without my glycine, which really, really helps with the cortisol addiction that I have. It's coming on Amazon next week. I overdose on magnesium glycate, and I overdose, you just pee it out. And I take the shrooms, I take the lion's mane. I take a lot. I take way more than they say you should. And then I take a 1905 pain gummy. And God, like 2 weekends ago, I just got it. And I was going to go out and I was like, I don't know, like pain relief. We'll take one of these. And I swear I sat there drooling all night. I didn't go out, which is that's not cool. It's not fun. A good friend called me. I could see he was calling. I was paralyzed. I couldn't take that call. So that's not good either. Anyway, shall we? I don't know. Shall we start with the show? I am Hugh Hendry. I talk too much. I speak too quickly. Enough about me. I'm in the sunny tropics. It's not been desperately sunny the last week or so. We've had tropical storms. Again, small violin. Oh, That reminds me, I'm talking to you through your ears. If you were watching the Substack, you would see that I've got my Japanese sunglasses back. What are they called? Dida, I think they're called. And these are freshly off the plane from Tokyo. My great friend Rick of Starling Gear. Check them out. That's where all the jewelry comes. Look at the silver ring, and they gave me this amazing blue one. I'm not quite sure, but so boom, boom, boom. Anyway, the sunglasses. I've got a very long board, a very long board, and the other week where there was high pressure, the sea was like a lake, and I was boom, boom. I must have done about 5 or 6 kilometers, maybe 10 kilometers actually. I fell off. I lost my sunglasses. $1,100 for these things. Try not to think about it. I am delighted that you all chose to come back again and tune into my eclectic thoughts for the day that's ending rapidly, the day of the 21st of October. A day that really had no economic data. I have to tell you, I've only been conversing with digital assistants. I mean, I feel like I'm a hedge fund manager, and the AI productivity. I can cover so much ground with my AI digital assistants. But today, I mean, it's like kids, and I'm like slapping and beating them up, and my language. I have to apologize to the machines. I have effing blinded to them. As an example, I was responding to a Twitter where a guy's like, my $20 gold coin in 1932 is now worth $4,390. And I'm like, so I was like, okay, what's the total return compound annual growth rate from the S&P or representative broad index? The S&P had not been institutionally formed in 1932, but you can approximate. The growth rate, if you're curious, is a remarkable 11.23% on average every year. And that compounds to about that $20 94 years later compounds to about $450,000. This is the reason why kids, put your money in stocks, put a lot of money in stocks and Bitcoin. A lot. And don't trade it. But anyway, I was using Super Grok. Sometimes super seems superfluous to the grok. And I was using ChatGPT. Gemini, it's just something about Google and Alphabet I just find repulsive. That's my prejudice. And oh my God, they just got these figures wrong again and again and again. And then they were like saying, yeah, no, we had these economic data figures today. And I'm like, no, you didn't. So anyway, but compound annual growth rates, I've got, here's my start values is 100. I've got 94 years. My compound annual growth rate is X, Y, Z, The machine should be able to answer that question, and it doesn't. That's quite a consternation. So I was taking on the why I mean, it's fun, it's engaging, and it's almost like why I did television. The ability to answer questions and think quickly is how I kind of pursue knowledge and how I understand. Again, I'm always putting probes into me. Do I understand it? So I put myself on risk, and live responses is where risk lives. But it's very, very disappointing. It's the difference between the pro universe and the retail universe. The lack of abstraction, of thought. Why am I doing this? What's my target? What's my process? intelligent thinking as opposed to a belief system, a tribal system. It's, yeah, I'm in love with gold. I'm hodling. I'm crazy, and it's boring. I don't watch as much TV movies. I can't recall the last movie I saw. I certainly can't recall the last new, if you will, contemporary movie. I would like to see that new one with the Wizzy director, the guy who did There Will Be Blood. Is it Paul Allen? That can't be his name. The one that's got everyone in it, Leonardo DiCaprio, Hidal. I'd like to see that. But I've never liked fiction, movies, novels, where the central character is suffering from a mental deviation, that they're not there. Because the point about fiction and reading books is reading is like going to the gym. I go to the gym every day. That bit is true. I was at the gym. I went to the gym later tonight, but I went to the gym. And reading is the same. And fiction is very, very good because you're role playing. What you do subconsciously is you take on the role of the central character and you make their decisions real time as you read it. So you're making the decision before they elect to tell you. And then that creates this frisson as you go, what are you doing? Or yeah, or don't touch, get away, don't trust them. You're living the life of the protagonist. And that's good. Great training. Great training is for being an investor. But it doesn't work when the lead character is just not there. It works when the person you're playing the levers and you're second guessing is smart. You want them to be smart. And so that's the disappointment. I'm not castigating people, but tribal belief systems are very boring. I don't go to church. Why am I? And till I'm blue in the face, hitting people with as much reasoned logic, but very few can take it. So I hope you're different. I'm sure you're different. You're here because you're here. Thank you for being here. And pot kettle black, calling, half baked, unhinged, acid capitalist. Cabaret, baby, cabaret. I belong on the stage. But hopefully, as you hear me expound, again, here I am just looking into the inky dark Caribbean night. Feels like, everyone goes to bed so early in the Caribbean, quite rightly. The days are so magnificent. It's just me, and I hope you can sense the consideration I give to everything and how I weigh things. I listen to myself, and I come back to you. So one of the issues I can't square with gold's 50% gain on the year. And yeah, what was it down today? Between 4 and 6%. And if anyone is actually a professional investor, I may need your help. I doubt it because I don't think this service exists. But one of the criteria I look for when trying to find something to vibe and talk to you about is I ask the digital assistants, hey, tell me, are there any $50 billion market cap stocks, America or globally, where the price today has moved 5% or more? And failing that, let's drop the market capitalization barrier to $10 billion. And, so today, General Motors, government motors, I think was up 15%. I mean, they had a stonking beat. And that's a bit of a head scratcher. Could it be a protective moat, which I would not agree with, but a protective moat being constructed to protect the dire, fragile nature of automation of the production of automobiles, cars, Hugh, cars, building cars in America. That is something I would like America to kind of forgo. Trade tariffs. And clearly there's a huge 100% plus tariff on EVs. Does Europe have the same? Not quite sure. Again, it's something question when I listen to this tomorrow. Hugh, look it up. One of the things, like I made this message yesterday, I was talking about how on earth could Chinese exports be up 6% year over year? We had the third quarter GDP data. And I was thinking, of course, that is a nominal figure, which is composed of volume plus price. The price metric has changed considerably owing to the tariff. So I wonder if Chinese exports were actually up. And I was thinking, as part of the pushback against the enemy, the sovereign enemy, not the people. The people are not our enemy. The fascist government who've been planning a kind of form of global dominance since the very beginning, arguably. Planning, oh my God, I'm now forgetting my thought process. Cars, autos, exports, and so the growth engine, the only growth engine available to the Chinese by choice, and it's not the only option, but by political choice, they are unwilling to favor domestic economic expansion by making the people richer vis-a-vis the rest of the world. Many thoughts are now coming into my head. I wonder if I can do them justice. The state planners do not trust the cyclicality that emerges when households become richer. I remind you, whilst the Chinese economy is substantial, its weight is incredible. Its GDP is the second largest economy only to America. Average per capita GDP is more like, I don't know, is it $10,000 or $12,000? Majority of people are still poor. So the growth is this beggar thy neighbor, as the total incremental income expansion of the world has become less and less. Yeah, what I'm trying to say is, if you look at GDP in Europe, let's say, it looks as if we flatlined in the 2020s. And China trying to capture more and more of that, whatever that marginal economic expansion is overseas, and capturing that by exporting cheap goods, if you will, is clearly being challenged by the tariffs. So you're putting tariffs raise the price. I'm not doing justice to that. I'm going to move on rapidly. Forgive me. I've got fog on my mind. Related to it, however, and China's been ding-donging with some of I wrote a lot today about China because of its psychops operation, I think, with chasing dopamine on social media platforms. It seems a very astute social media influencer. It has many advocates, people who argue that the Chinese system is superior to ours. I bet he's changing, but that awful rodent person, I know that's a terrible thing to say when they're not here to defend themselves, but varicose veins, the guy you kind of rock, you kind of, to his considerable positive side, bit of a motorbike, wears motorbike jackets, drives motorbikes. And the rumor is that Pulp song, I'm in Love with the Common People, that Jarvis Cocker wrote that song about his wife. Who knows? I like those stories. But I presented with him, and he's a big social media deal, and he's written a lot of books. And he's a dick. Forgive me, but he's a penis. The most appalling individual that I've had the disfortune to come across. I was invited to. God, I did not think I was going down this route tonight. That kind of wonderful economics conference in Ballyan, I don't know where it is, somewhere in southern. Forgive me, my dear Irish friends. I can't remember the name of the town. And in October every year, they host an economics kind of Woodstock. And I went, and I was on several panels with him, and he just makes stuff up. And he's a great lover of the fascist politics of China. And he hates America. And it's like, you've got to, what Trump was charging, what were they charging for the golden visas? But it was something like 5 million. I think they've slashed it to 1 million. I'd have kept it at 5. But, people are willing to pay it. 1 million. I'd pay 5 million. I don't know if I could afford it. I don't need it. I'm in St. Bart's. Yeah, I think China would pay you $1 million to go and live there. Grotesque individual. Anyway, of course, they're not. They're bullies. They clearly have it. They're great under pressure. They're great public speakers. They understand in great depth rudimentary economics. And then they've got this reputation, and people are scared about the reputation. It's like the Nobel economists, reporters. They like, I don't know, it's economics. I can't. Whatever you say, I'm going to accept it. And so they get lazy. And then, of course, they're better than everyone, and so they're never prepared. And then they meet the Austin capitalist, and they look at me and think, oh, he's an idiot. And I'm like, I ain't an idiot. I might act like an idiot, but I ain't an idiot. And so I'm like, what are you talking about? And just boom, boom, boom. Next thing I hear, he's refusing to share the stage if I'm on the panel, the next panel. He's not coming back if I get invited. Varicose veins, you are a penis. Anyway, let's move on. That was like negative karma. Oh my God. Oh, and then finally. So because I was talking about the things that annoy me that I don't have answers for. And by airing it in this forum, in this dark, it's just you and I, you let the genie come out. It's damn brave of me. But there aren't $45 trillion in China. That's what the M2 is. And I'm going to be discussing, again, money. As we continue, we're just passing the 25-minute mark. I'm putting a timer on me. I'm trying to get quicker. But the M2 in China, it's red cabbage. It's renminbi. And at the present exchange rate, that equates to $45 trillion. Now, what that actually means is, and this just came to me today, like the double staircase. I didn't dream it. Maybe I did. I was daydreaming it a little bit. The $45 trillion doesn't exist. It just means that the exchange rate we're using is wrong. Most likely the functioning M2 in China is half of that figure. Functioning, what does that mean? It means, well, dollar adjusted. It means the currency that's left over, if you were to truly account for the disaster, the fascist communists ran amok. They ran a closed system. So they had their own house and they messed up in terms of, so you had essentially high-powered money entering the economic system via $1 trillion positive trade balance a year. And that comes in as dollars and it gets converted to renminbi. And then there's a reserve ratio, which controls the multiplication of that money. It's high-powered and it's the multiplication of it. Takes you from base money to the M2, to the elevated M2. And they got lax and they created a bubble economy called property, just like the Japanese did. China is a trustless system. So the key again, but is the M2, the $45 trillion. What that's telling me is that the exchange rate should be 15 renminbi. You should need 15 renminbi to buy a US dollar. There's a big statement. And the pushback against that is, you're having a laugh. Because they're doing $1 trillion in trade surplus a year. But they're only doing $1 trillion. And we might have to start using that in the past tense. Because our political economy outside China was so poor and accepting of such a bad deal. And of course, we're pushing back. There was fan mail from the United Kingdom today, I think. And someone was saying, oh, is this crazy? But, would Trump and the present administration do away with the dollar's reserve currency status? Why would they do that? And again, that's a great question, because the reserve currency status has always been described as an exorbitant privilege. It's a privilege that when you accommodated the Chinese, it became an exorbitant cost. So the genesis of that idea is not off, it's quite relevant. But of course, you don't jettison the reserve currency. You jettison the mercantilism. You say, I ain't accepting it. No more. So the growth rate and the ability to expand the Chinese economy from the overseas sector has peaked and it's only going to go down. And until such time as they pivot and change, and I pray to God they do, change their political economy and try and foster domestic economic expansion, make Chinese people wealthier. Until that time, China's busted. They know it, and so they're hiding in a box called a closed capital account. But as social media influencers, they are second to none. That TikTok, and they're on the TikTok and they're like, oh, we're buying gold. And everyone's, oh, they're buying gold. Wow, the dollar's going to crash. The renminbi, what are you talking about? You've got 0.3 trillion official gold reserves in China and 45 trillion, I said this yesterday, of M2. You have, now I believe gold is not a monetary metal, but on the basis that it certainly was, and the basis that it is, There's just nothing. There's no glue holding China together. Anyway, enough about China. Not my disdain, but my discomfort with where gold is trading is that it doesn't feel convex. I like things that could go up. I talk about great sex. What? Great. What? I ask the question, what's better than great sex? Nothing. When was the last? Take a moment and just think about the last time. It's an old routine. I used to do this at hedge fund conferences. But come on, let's take that moment. It's just you and me. When was the last time? Okay, yeah. So I try and conceive of things which are as good as that, and making 2, 3, 4, 5, 6, 7 times your money is orgasmic. And gold at 4,300, it's not orgasmic. Now, being the orgasmic kind of guy that I am, I was buying gold at the bottom, $275 in 2002 and early 2003. And if I had held on, which I didn't, I just traded it. But that would have been a 15 bagger. 15 times your money. That's better than great sex. That's better than fucking. Oh my God, that's so crude. Nothing is better than great sex. But 15 times. Today, I just can't see how you move the needle. And you would think, but for gold, but other people disagree, and they think it's going to double, triple from here. I tried to put some numbers around that a tripling would be assuming that gold is a monetary metal, and the monetary infrastructure of America would require, if you will, the full faith and backing of gold bullion. And so we'd go back and we'd look at historical ratios, and that they would suggest that maybe the totality of American dollars in the American economy, the M2, the $22.5 trillion, that America should have about 12% of that number in gold reserves. And that would require that would take you to a doubling, tripling in the present gold price. But yeah, I do not. I would say that's not going to happen. That's why I say gold is not a monetary metal anymore. But clearly people are still thinking, and what I just described is a tail. Very low probability event, but people seem. Is anyone thinking? I spent all day on Twitter. I have to ask the question, is anyone thinking? I try and think. And so the curious thing for me is there is convexity on very low probability events beginning to appear elsewhere. So why are people not, why are they appearing now? And why are they not being seized upon by the body of investor? Or would you like to know what I'm talking about? We'll come a little bit closer. I am talking about out of the money call options on US dollar short-term interest rates, on SOFR. And SOFR has it's replaced the old LIBOR. They didn't like LIBOR because it ended up having it moved more than just the interest rates. It moved to reflect a kind of a risk premium with regard to counterparty risk. And so, my God, did it have convexity? It could really move. SOFR is now bounded between, preposterous to say 100 and zero, but really is kind of bounded between a price of, let's say, 94 and 100. And I'm looking at the end of next year, but I'm actually going to price up March of 27. And I'm doing so because the SOFR contracts work on a kind of weighted average of where rates were over the quarter. Whatever. I mean, who cares about that point? So they're priced as 100 minus the implied rate. And I was saying to you that there seems to be an acceptance both in public and private circles that the R squared, the beige, not the beige book, but the neutral rate of policy rate in America, where it's neither here nor there for economic growth in terms of influence, is about 3%. So 100 minus 3 gives you 97. That's kind of where these rate expectations are coalescing towards the end of next year. So what if you think rates are going to fall more? Then you want to buy the future, because you think if they fall more, then it's going to trade closer to 100. And we talk about basis points. Basis point moves in the implied rate. And so on these contracts, basis point is 0.01%. And every basis point is $25 per contract. I want to talk about, so rather than just buy the futures directly, you can buy call options or put options, but we're here for call options on those futures. And I've got to tell you, an option is simply the right, not the obligation, to buy. And then you determine the specific strike price. And so you benefit if the underlying asset rises in price. And of course, that happens if interest rates fall, and if they fall more than everyone else believes. So buying the call option is a leveraged way to express a view. And it seems to be the same view that's dominant in the gold market, which is, the politicians and the central bank, they're no longer wise, conservative custodians of, they're not hard money people. And they're just, they bail people, they bail the undeserving out. And they cut interest rates at the slightest hesitation. Okay, so gold is up 50%. So clearly there's going to be a lot of hacking and cutting of interest rates. And on that basis, the terminal rate of where rates end up, it's not going to be neutral. It's going to be very, very expansionary. And that's below 3%. And that's above 97 on these SOFR contracts. So I was talking with Ben Bray, Capital Misallocation today, and he was helping me price up a 99 strike. That's 1% rates. That's the Fed at 1, kind of by the end of next year in the first quarter of 2027. It's a low probability event, but it's consistent and is consistent with kind of the behavior of gold. If gold has an intelligence, which is a big if. And so I was trying to put this into, so you're going to be using an Interactive Brokers, an exchange, and they're going to want you to put margin up to hold this position. So I was thinking, okay, I post $10,000 with the exchange. Now at that level, each basis point equals Yeah, we did 0.01%. Each basis point is $25 per futures contract. And, 4 is the magic number. 4 is the price of the call option, the 99 call option. So I've got $25. I'm times 4. And I've got, what am I doing? $25 per futures contract. One is worth 20. And each one, no. I've got I'm $100 per contract. So if I'm buying 100 of these contracts. That's the $10,000 that I'm going to pony up as margin. That's my total cost. That's the most I can lose if this trade doesn't work. And I've created a position that it controls 100 SOFR futures with a combined value of, let me think about this, of $25 times 100 contracts for every basis point of movement in the implied rate. So that's 2.5. Let me say that slowly. Combined, I've got 100 futures contracts. I'm $25 times 100 contracts. And then I'm going to multiply it by every basis point of movement that we see in rates. Another way of saying that is I've got $2,500 per basis point of change in anticipated Fed policy rates. So, again, imagining where gold is, the Federal Reserve cuts rates sharply. And the implied rate for March 2027, it drops from 3% to 1%. That's 200 basis points. 2 full percentage points. 200 points times $2,500. It's $500,000 in profit. I put up 10 grand and I could win 500,000. That is convexity. My friends, why would you have $10,000 in gold when you could have that trade on? These are not mutually exclusive. You can have both, but you can see how you'd be kind of clipping and saying, yeah, okay. The more gold seems robust and confident, if you can maintain these elevated levels, then you would imagine that the probability, which presently is a very, very low probability, but that probability is going to rise. And wow, you're playing with a loaded gun. It's the power of leverage. 50 times your money. That would, I have to say, if I had 10 grand and I made 500,000, that would be better than any sex I've ever had in my life. I don't know what that says about my sex life. Let's talk about yours. Send me messages. Do not send me pictures. Unless you're... No, I didn't say that. The other intrigue is you could actually, because you've had to pony up 10,000. I mean, you could sell a call. You could sell a put. I mean, you could do many things. But you could make it a zero cost really easily. But the exchange would not give you a break. They would actually demand that you had to pony up more margin. You'd have to put more cash with them, because if we're wrong, and it's incredible how these conversations can radically change in the space of 3 to 6 months. Maybe they're talking about higher rates. Higher rates, baby. I mean, you could be losing 500,000 like really easily. So we don't need that. But gold, I said it's not going to triple from here. I said last night that maybe it could go to about, I think, 6,400, did I say? And I was saying that if we compared, so this is a phenomenal bull market in gold, is risen 15 times from the lows set at the very beginning of 2003. And that was a remarkably bombed out period. Gold had fallen and stayed down for 23 years at a time. And so at that point, you could say the 1980s and the 1990s and the early 2000s, gold lost its store of value. It was clearly not a store of value. It went from $800 in 1980, January 1980, to $275 late 2002. It was not a store of value. It had lost it. Seems to be regaining it. But anyway, that's the background, the context. And I was saying, well, maybe it replicates the 1970s, where it rose 24 times. So apply 24 to 275, and you get a 6 handle. On further reflection, I don't think that's even possible. And let me tell you why. And let's again compare, let's wheel out monetary aggregates. Let's think about gold as a monetary metal. In 1971, when the US came off the gold standard, what can I say? I'm jumping ahead a little bit in my head. Let's say it anyway. So we have discussed M2. And now I want to talk about M0. M0. Sorry, my mind is all M0. Oh, let's pump it up. M0 has lots of different names. Base money, high-powered money. Base money is, I should be in marketing. It's the root, a seed of capitalism. This is why we have the acid capitalist. We wouldn't have acid capitalism without the root, and the root is base money. Let's get one thing straight. Base is the real deal. It's the raw chemical. It's the mother lode. That's what it is. You want to talk capitalism? You don't start with the denizens of Wall Street. You start in the boiler room with the base. The base, baby. The high-powered, this money. This is the stuff that gets everyone worried. This is the money that the central bank creates, boom, out of nothing. The Wizard of Oz. Largely, there are two parts. There's the currency and the circulation. This is very much the tip of the iceberg, the visible part. How visible is it? I did get my haircut at the weekend. Thank you very much, Marco. And Marco's very black market, and so I had to pay him cash bills, euro bills. I didn't have enough. I had to go. There you go. I didn't have enough. I didn't even have a wallet. But yeah, visible part of the iceberg, coins. Coins, I refuse to touch coins. Paper. Wrinkled dead presidents. The dead Benjamins. Again, I'm back. Calm it down, you. Dead Benjamins. We're talking about the money that you grip in sweaty hands at a strip bar. Don't like strip bars. Did I tell you that story? I was in a strip bar. Why am I telling you that? In Tokyo. And it was just me and Ty, my good friend of mine. And it was a weird scene. They had those real to life. Why am I talking about this? The dolls, plastic. They're not plastic. It's so insane how realistic they are. Dead Benjamins. That place killed me. The free alcohol was nitroglycerin. Burnt a hole right through my gut until a week on Wednesday. But yeah, we're talking about the parts that matter, the currency in circulation as I try and get this thing back on the road. We're talking about the notes which are used, hoarded. Some people snort it. I think cocaine is a hideous drug. And some have the misfortune of burning their Benjamins. But the big one is the reserve funds that the banks keep on tap. They stash them at the Fed or they stuff them in bank vaults. There you go. These are the rations for a system that's always one panic away from a run. Did anyone say Silicon Valley didn't really work on that basis? You got your required reserves and then you got your excess reserves. And that's been kind of quantitative easing for the last 15 years with the central banks like, hey, take more, hey, have more fun, more crazy money. The banks, they can lend it, they can sit on it, they can play safe. By and large, they've sat on it and they've played safe with that component. Anyway, high power money is like the spores and the mushrooms. Every economic high you can trace back to the mold, to the mushrooms, to the shrooms. Why is it high powered? Because it's the base money multiplier. Your $1 doesn't sit still. It's the seed that grows a forest of deposits. We're talking about fractional reserve banking. You know, you deposit $100, the bank keeps 10, lends 90. That 90 lands in someone else's account. Repeat. Your one Benjamin fathers what? $1,000. That's the rocket fuel. And who controls the rocket fuel? Well, the central bank is, let's keep with the drug metaphor, the central bank, the Fed, is your dealer. They can take you higher. They don't want to just influence base money. They own it. It's their creation. It's their Frankenstein. It's their liability. But unlike the M2, that is really a function of the private sector banks and their lending decisions. Like how funky, how confident, how risk-seeking are they? The base doesn't give a damn about the private sector's appetite for risk. The base is the base. The base is the heartbeat of the financial system. The silent scream. So that's where the acid drips. And it's where the real story begins. And guess what? I don't know. What am I going to say? So I'm still going, okay, gold is, I keep saying gold is not a monetary metal, but let's pretend it is a monetary metal. Today, the US official gold reserves represent 19% of America's base money. 1 in 5. 1 in 5 US base money dollars backed by gold. You can't see me, but I'm bowing. I'm bowing on behalf of the US economy, the US dollar. What the hell is the problem with people? And this whole made up that they're all going to blow the system. Yeah. It's kind of a system which is well collateralized, may I say? And I came into this because what was I saying? I was saying that, God, can I remember what I was saying? I was saying that I was offering price targets for where this bull market in gold may flare out to. And I suggested that the big one would be the replication of the 1970s. And that was a 24 bagger from $35 to $850. If we use the average price of gold in 1980, which I think was about $600. The US gold stash exceeded the monetary base. That's how extreme. That's a 24 bagger in 9 years. So I'm going to dial back from last night. I don't think gold in this run is going to go to 6,000. I think we're pretty close to these are the highs. Just a mad thought. Let's do some more mad thoughts, and then let's be done with this damn thing. This is turning into another 1 hour at least. Let's invest like a pro. Let's try. Let's see if I can round this up. Keep it simple. I want you to think we've got 4 buckets at our disposal. I wish I had a bucket. We go. A bucket is actually a seed. Putting that on. I'm putting that there. I'm taking that off. I don't know what I'm doing. We got 4 buckets. Stocks. You've got alternatives. You've got treasuries. And you've got cash. And around here, folks, we got some rules, yeah? If we're going to buy something, the spot price has to exceed the 1 year moving average, which is shorthand for saying the price is trending higher. And around here, we are cautious about the spot and its deviation to the 1 year moving average. And we don't like it being more than 30%. And one of our observations is that typically every 12 months, you will see at least one mean reversion moment where the spot price will return to the 1 year moving average. So we don't barge into and own risk positions when they are too far away from that 1 year moving average. Let's assume we've got a $1 million portfolio. And let's assume that we're kind of hedge funds or we're kind of smart. And like for most people, this is feasible. We are not. Very little cash is going to leave our portfolio. Take that out. Very little is going to leave it because everything we do, we're going to buy futures and contract for differences. So we're going to run our $1 million portfolio. And I want to say we probably can run this strategy by putting about 100,000 max as margin to our counterparty. And they're going to transact for us. So what that means is immediately, because the first bucket was cash, I'm putting 900. I've had to put 100,000 away from me as collateral to underwrite my futures risk positions. The 900 I'm putting into cash at 4%. And I might structure that, might take a bit of, I'll take immediate, I'll take 6 month, 2 year. Cash. 4%. I mean, on that basis, year to date, I'm up 3.5%. I haven't even invested yet. Now we can't own, sorry, Mr. Levinson, but we can't own the long end of the bond market yet. And what I want to suggest is like we want to be this just helps to get us started in this conversation. We want to think 20 is quadrants. We're going to put 25%, 250 grand in each of these buckets. So the bonds, nothing. Oh no, actually, in the bonds, we're going to buy. We're going to put 10 grand, 10 grand, nothing, just to start, but, and to reinforce that this is a very low probability of succeeding. I'm going to put 10,000 into the SOFR, the option contract for the H7s, the March 27 contracts. And we're putting everything on rates being 1% or less in a year's time. Treasuries, nothing. Cash, we said, well, it's not even the investment strategy yet, but we said we'd have 900,000 in the 1 year, the cash treasury to the 1 year treasury. Cash, however, is also FX. So whilst we're not doing the treasuries just now, I would do, there's two ETFs. The one that I can remember is the ticker symbol is YCL. And that is a 2 times leveraged yen short position. I'm long dollars, I'm short the yen. It's 2 times leveraged, it's not 10 times. And the underlying dollar yen, the volatility is not the volatility of Bitcoin. It's very, very low volatility. So that's why I'm 2 times leveraged. I typically disown leveraged ETFs, typically. But I'm going to put 25%, which is really like 50, and I'm short the yen and I'm long the dollar. That's my cash position. And I've got 10 grand in the SOFR. Okay, so cash, treasuries, we've done half of our portfolio. Stocks has to be the Nikkei or the TOPIX or Japanese stocks. It's 18% above its 1 year and a bit gappy. And I said to you, so we got rules and I want to have 25%, but I ain't gonna put my 25% immediately in with it being about 20% above its 1 year moving average. So I'm going to have 12.5% in a Nikkei future. And yeah, screw it. I play a flat. I want to have some single name stocks, not many. I'd put 2% in the Albemarle, the lithium stock story that we discussed. We're just breaking the 1 year. We've had a bear market. We're now beginning to trade spot above 1 year, and geopolitically, the stock has gained sponsorship from the government. The US government wants Albemarle to succeed, so I want 2% in my portfolio. And you can buy that again on margin contract. Can you contracts for difference? Tell me how you do that. Does anyone do that? Or are you all just cash buyers of stocks? Fan mail, let me know. And I'd also have 2%. Let's make them 2.5% just now, so they add to 5. So 2.5% in the Albemarle, and I'd have 2.5% in that pharma and biotech ETF I was talking about. I think it was Invesco. I think it was maybe PBE, Peter, Brian, Edward. That's certainly one of them. Nice breakout from a long congestion period. I think it's going to be an AI beneficiary. So I've got 12.5% in Japan, and I got 5% in 2 US stocks. And you know what? I would do 3%. I would do 2.5%. So it all adds up. I do 2.5% in the China large cap ETF, the FXI. So that's me got 20% in stocks. So I'm 5% short. So I'm looking, because I'm saying 25 in each, just as a general conception. I've got room to buy, lots of room to buy on pullbacks. Why China? Yeah, because you may have guessed, I keep calling them fascists, not the people. The Chinese people are amazing. Girls are so hot. Things I say. FXI, I would buy it to test my prejudice. sometimes Jesse Livermore said you can understand things better if you start to make money in things that you kind of thought you wanted to short. It's above the 1 year moving average. The government, it's pro policy. If the Chinese can control these things, the Chinese government wants stocks to rise. So I want to know what that feels like. So 2.5%. So I've got 90% of the portfolio in 4 year cash and 4%. Let me say that again. I have 90% of the fund's assets in cash, dollar cash, yielding 4%. I have margined $10,000 away, and I own a very low probability bet that the Fed funds rate may be 1% or less by the end of next year. And I've got essentially a half of the fund in economic value. I'm betting long the dollar, short the yen. And I'm long Japanese equities, which I think I'm even longer yen now, or I'm even shorter yen because I've got 12.5% long the equities, which will inversely perform. If the yen is weak, equities will be strong. It's a transfer of wealth to the corporate sector in Japan when you get that change in the currency. I've got 3 individual eclectic stock positions. And then alternatives to money. This would be commodities, digital, real estate, private equity, index-linked securities. And I mean, no question, 25% and looking to buy more would be Bobby Digital. I would buy the ETF or I'd buy a Bitcoin future, depending on where I can, to avoid having to have cash leave the account. I'd have 25%. Spot price is 108. 1 year average is like 99, 100,000. Easy. I want to buy much more of that. That's my portfolio. Think about that. That's not a recommendation. It's not even my portfolio. It's just I'm trying to have more of a kind of thoughtful how I would do things. I am the jester, but I'm hoping to be the provocateur, and I'm hoping to try and shine a light on how the pros set portfolios up. There you go, folks. I am going to say I'm out of here. I'll love you, and let's see if I do this again. Oh my God. And what is the time? The time is 7. There are only 7 minutes left in this Tuesday. Good night. I love you. Good night.